Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson, and I'm making professional trading simple. Welcome to the weekend newsletter for my daily subscribers. Hope you guys have had a great weekend. Get ready to get into some new trading coming into the options expiration week starting tomorrow. As always, for those of you that are kind of new to the videos, during options expiration, this is how I usually play this week. I cut back on my position sizes and usually day trade. Don't typically hold things overnight. It's completely up to you, though, how you want to manage it. All I'm here to do is give you some suggestions and recommendations for the upcoming week, along with support resistance levels. Try to help you along the way. But how you manage it is completely up to you. Some people will hold all week. Some people will only hold for the day. It really. Some people will take full position sizes, and some people will take quarter. Doesn't make any difference how you play it. It's all completely up to you. Because of the volatility that usually comes with this particular week, will be a little bit more cautious in my trading for the first 3 days. Usually the volatility starts to bleed out of it towards the end of the week, with maybe a little bit scattered here Thursday, Friday time frame. Sometimes, I don't think last time it was all that exciting on Thursday, Friday, and most of the action happened Monday, Tuesday, Wednesday. So I would expect to maybe see some of that again this week. I had a pretty good week last week. I had a lot of good calls. If you were on a part of my subscribers newsletter last week, you were also informed to watch and how to play COH, MED, MELI, and POR. Those were some pretty good plays. There were other ones that I had on the list that I have taken off the list for my subscribers that either went sideways or didn't make. They made money, but they didn't make a lot. They didn't make great strides. So I'm only bringing up a few of the plays that were on the list from last week. Those have all been replaced now, and they have new ones on the list for this upcoming week, along with a bunch of other stuff I'll be talking about. I go into a little bit more on the SPX and what I'm looking at there. There's some very interesting stuff that I found this weekend that I'll be talking with my subscribers about. So let's get into it for the daily video watchers here. And as you can see, here is the Dow. And I played around a little bit this weekend. Drew in some other trend lines here and here. Also put in these straight lines here in a teal color. Why, I don't know. Just because I can. I guess it was pretty at the time. But what I really want to show you here is how the acceleration has happened here. We're right along this trend line. We're also right up to a double top area in the Dow. The teal lines represent some little mini inverse head and shoulders patterns if you want to look for them. Here's a shoulder, here's a head, here's a shoulder with the breakout here. Now, if we look at a larger one, here's a shoulder, here's a head, here's a really small shoulder that we could potentially break out and above. How valid these are all going to become has yet to be decided. We won't know until we're into next week a little while. But certainly stuff to take a look at. Very interesting, actually, to find this type, especially in a head and shoulders within a head and shoulders, which is kind of what we're looking at here. So these are both inverse head and shoulders, and we're waiting for a breakout. These would be bullish formations, for those of you that aren't familiar with the head and shoulders, or the inverse. In this case, it's an inverse head and shoulders, and that is a bullish scenario. But ultimately, what you guys need to be watching is a break up and above this upper line here. This is going to be my MO for about the next 5-10 minutes, is this pattern will repeat itself. And that it'll be break the high here, or break the high here, or whatever the case may be. So we want to be watching this on the Dow. Now the Dow has basically come all the way back up to retest this high that it was at back here on the 23rd, 24th area of last month. So this should hold, or it should act as resistance. If it doesn't and it blows through it early Monday morning, you can expect the bears to cover, the bulls to start rushing in, and away we go again. same song, different verse. So as I point out these inverse head and shoulders, they are valid as of right now today. They may not be valid as of Monday, 10 a.m. We don't know yet until the markets open. We'll see what the futures do. I've not seen any bad news, good news kind of come out, so I don't know if there's any news that's going to be moving the markets come Monday morning. But these are always things that we need to be watching as technicians in our charts, because they can point to, and in this case, the charts really do, for all practical purposes, still look bullish. I would certainly wait for a break now that we're back up to a double topping area, but I gotta go with what the chart says, and the charts are showing bullish action. Dow on a daily, we'll flip here. You can see we are up over the 20-day moving average. We're back up to this double top area here. A break above this area takes us up to this upper trend line. That's got to be the next place to look, and ultimately the 10,000 range. There was a lot of talk about that a while back. Then we saw some drops. Everybody said, we'll never make it. You know what? It's back in play. We're only 140 points away. No reason to think we couldn't, especially if we break these highs. The bears will cover, and I think that'll be the accelerating factor to the 10,000 mark. On the NASDAQ 60-minute, here we are again. Here's the top right back here, going back to last month. You can see we've got these little head and shoulder type things happening. Here's a shoulder, here's the head, here's a little shoulder here. Same type of trend line we saw in the Dow. It's holding all of it. It's holding the trend line. It's got to break up and above this 1735-ish area here to really get going, but the next stop's going to be 1745. So you can see here, this is about where the Dow's at. It's back up to this level. The NASDAQ has not made it back to that yet, which is odd. The NASDAQ's usually much stronger than the rest of the indices and usually a leading indicator. So will it follow the Dow? We don't know. Got to wait till Monday. But these are what you're looking for come Monday on your support resistance lines. For the daily NASDAQ, we are back up to this dotted line I have drawn in here. And you can see that we could see it start a little bit over. The next candle will, of course, start over from this and maybe work its back up, way back up into this 1750 area again. That would make for a nice double top area. I would be hard-pressed to think that we wouldn't see some sort of a bounce or a pullback at that point. Maybe it's a more major one, maybe it's just a minor one, but something nonetheless. So if you're, for some reason, long Monday morning and it gets up to the 1750 area, you might, my suggestion is to take some off the table at the 1750 area. Maybe if you're an all or nothing type of person, you take it all off and you wait for it to break the 1750 and then re-enter again. Completely up to you how you play it. But I would experience, or tell you that we should experience some sort of a pullback right around that 1750 area. NDX on a weekly. As I've been saying, we got a weekly candle that closed up here. Yes, the volume was only okay, but pretty much where we are, or have been for the last month or so. This just looks like a break of resistance, a pullback to show to make resistance support, and now a blast up. A break above this 1755 area takes us to 1773, and maybe ultimately over this 1800 area back to this orange line. Things are very bullish looking for the time being. Going into Monday, I definitely have to be bullish in my neutral to bullish.